A market shift is what I call it. Some people call it a momentum shift. The new word now is a CHOCH, change of character. And all it is basically the first indication that you're going to be getting a change in trend. For example, this is bullish price action. And the first indication that we'll be getting bearish price action or pullback is when a low fails. So we take this low. This might be the first indication if supply gets respected that we're getting our pullback. And then the first indication is a market shift, because if the price was to continue, this level of demand would get respected and we would have put in a new higher high, but it failed. So we have a market shift from bullish to bearish. And then after a market shift, if the intentions are true, you will see in this example supply get respected, and then to follow a market shift is a break of structure. And I'm just going to go through the best times to when to use them and when they're powerful. And same here, you know, we're now starting to have this internal structure become bearish. And when do you know it's going to align with the higher time frame of this bullish leg, of making these are daily higher lows and higher highs? When do we know we're going to get our market shift to continue with the higher time frame trend? Once the lower low, lower high, lower low, lower high, once the high fails, you can see if demand is now getting respected that the trend has shifted from bearish back to bullish. And that is the first indication of your trend change. This is the high that went, so this is the market shift, then the break of structure, then the break of structure. And another powerful way to use them is, of course, if you're measuring your higher time frame leg and you get a high failing here, a market shift and discount of the leg, you know, it's very strong confluences together. And then the lows start to get respected and the highs start to get taken. You know, this is a true market shift. Of course, you will get them in the middle of the leg, but using this premium and discount tool, you know you want to be taking the high probable areas and discount. And if the higher time frame leg, if we have our higher low here, our higher high here, price doesn't just, you know, continue like this forever. We know at some point we're going to have to come back, pull back to put in the higher low. So say this is the daily time frame and you see a 4-hour logo, you could start to anticipate, okay, we might be getting the daily pullback because the 4-hour low did not hold and has went. So the first low to go, and then you're anticipating that you know that the higher time frame needs to put in a higher low. So this is when the market shift could be powerful. Higher time frame is bullish, we need to pull back, the first low has went and we're in premium. So this market shift is important to me. And then, you know, is supply going to be holding and getting respected? We get a break of structure. Okay, I'm going to short, and this is when I'm going to take counter trend trades, but still following pro order flow. Why is order flow pro? Because it was bullish, we've had an internal market shift, supply is now getting respected, so I'm now following the lower lows, lower highs, lower lows, lower highs, and I'm going to keep taking shorts until the market says otherwise. When the high fails, what's our understanding? We know a higher low, higher time frame, higher low needs to be put in. So when this high goes, okay, this could be the higher low, it's in the discount of the higher time frame leg, and now demand is respected. Okay, I'm going to start taking longs, knowing that we need to go and put in a new higher high. And that's just a market shift. Could be easy in theory, might get lost in price, but it's you know, let's go to some examples in the chat and we'll go through it and see if we could understand it a bit. Why have I used this? We hit a higher time frame supply zone, and this low that put in this high, or you could say this high, That'll come down first. So this low here, they're putting this high, has been taken. You can then obviously trade from here, understanding that the internal structure is now bearish. Why? Because we were bullish. If the trend was to continue being bullish and there was no pullback, we would have got respected here and a higher high would have went in. So we've had a low fail, market shift. Supply is being respected. What happened? A break of structure. This is why I was taking shots within here, down into discount of the leg. So this is when a market shift can be powerful and they're good to use. Let's go to some recent price action. Let's go to 15 minute. In fact, an example I used in another video with, if you go to, let's go to this. Obviously I'm just talking about price action. Let's go to the 15 minute. This is our market shift on the 15 minute. Why is this the market shift? We are bearish. We pull back, so this is a high that puts in the low. Price, if it was to continue bearish, would come up, get respected, and we would continue making lower highs and lower lows. So when we see this pullback, if I get a market shift here, if this goes, then I've got a market shift to be bullish. And that's just the market shift in price. What happens after this market shift? We change from bearish to bullish within this leg. Let's go here. Say this is our break of structure. I'm going to use this example here. Okay, this is a leg that we're going to be, just ignore this just now. I've not looked to see if this is like the lowest point, it's just to give an example of a market shift. So we've got this bit of price action here. We've made higher high, higher low, higher high. So you can anticipate a pullback, you know, after the high, high, higher low sequence and then a break of structure. We can anticipate a pullback. So where would your market shift be? This low, putting this high, was taken. Could also use this low, putting this high, was taken. You're going to get the same outcome here. But all you're trying to identify is a change and shift of the market. So you can put it here. We went from bullish to bearish. That's just what a market shift is. Or here. This is demand. This is a demand range. Prices come in and failed to go above the high. This is your supply range. This is your market shift. And yeah, that's what a market shift is. Let's look at, this is a low, this is a high, but I'll get rid of the other ones first. Okay, this is a low, this is a high. This is just say a level of demand we've come into. We're just talking about market shifts in this video. Price action is bearish, making lower lows, lower highs, lower lows, lower highs, lower lows. What we need to see go, or to have a market shift? We need to see the high go. What happens? The high goes. This is your market shift. We went from bearish to bullish. The market's changed, it's shifted. Now we get our bullish price action. We get our market shift here because we go from bullish to bearish market shift. It's just your first indication that the trend may be changing. And obviously, with our confluences, you could, add up everything else also. Because you do also, don't be, this is counter trend, so you might get your market shift. We can pull in. If the highs go, we got to understand, you're trading counter trend here, so it's more risky. But if you get the market shift, supply respects, then you get a break of structure. This is really then start to show the order flow being bearish. Okay, keep taking your sells until we hit discount. Don't start selling here, because we're now in the discount of the leg. We're going to wait until we get this price action. One of the highs go, and then we're going to start looking for our longs. This is our market shift in here. This high has been taken by this low. And this is why you wait for your 15-minute market shift here, and then you can play your 1-minute market shift within your 15-minute demand. But yeah, that is the market shift, and I hope it, in fact, let me quickly do this one. This is another one. Let's go with, let's just say this is a swing point. Don't focus on any of that just now, we're just talking about market shifts. This is a high, this is a low. We've got a major break from here. Okay, this is a swing low, swing high. We've broke some internal structure here, but we know we're in a bullish leg. This is a demand. So this is where it can be powerful to use, right? I'm going to wait for the market shift and discount. What's the market shift? Change in trend. We're bearish, we come in with range, we take the lows, we take the highs. This is our market shift. And of course, again, you can use this, because this is a high that puts in this low, gets taken. But I like to use the high that made the overall low, the whole leg. This could come up and put in like this. But if we take the extreme that put in the leg, it just holds a bit more weight for me. So this is our market shift. We went from bearish to now bullish. This is the last high that put in this low. This is a market shift. But you could see market shifts all over the place. Just look at them as, what I've said here. Look for your market shifts in your higher time frame zones with your 15-minute realignments, yada yada. We've got swing points here. I'm not looking for a market shift in here. Is it sometimes going to happen? Of course. But yeah, market shift is the first indication that the trend can be shifting, and it's on all time frames. But yeah, have a look at the charts and see if you could get some examples. Send them to me, I'll have a look at them, and then we'll go over some stuff. Hope you enjoyed this video, and catch you in another one.